we are starting off strong with an interview with our Chief Executive Officer. Alil Dibadj joined our firm in 2022 and has since made great strides in setting the company up for future success. He started off in his new role by consulting with hundreds and hundreds of employees across the globe to reformulate the firm's mission, values, and purpose. He put together a strategic leadership team and asked them to focus on the strategic direction of the firm in the short and long term. And the most recent set of quarterly earnings have seen $5.5 billion of inflows, and assets under management increased 8% to $310.5 billion. Coincidence? Let's find out. Ali, welcome. Thanks for joining us from Denver. I've just listed off, as you could hear, a few of the different initiatives you and the senior leadership team have kicked off in the past months. And judging by the last set of company results, is the work paying off, or is it too early to tell?
Well, first off, hi, Sarah. Thank you, everybody, for joining this call. It's been quite a busy year, and I would be remiss in not mentioning how pleased I am, Sarah, to have you on stage managing this. You've had quite a busy year as well, bringing us both inspiration and energy. So it's very, very much of an honor to be here with you and to be here with the audience as well. So it has been a busy year for Janus Henderson as well. We've certainly making great strides in terms of both the strategy and the execution of that strategy, as well as mission, value, purpose, and creating fuel for growth so that we can invest back in the business in a very interesting time in the marketplace on behalf of our clients and our clients' clients. If you would have told me a year ago, or almost a year ago, that we'd be where we are today, I would have been very pleased and frankly wouldn't have believed you. So we have made some great strides. Now, it's important to note that one quarter does not a trend make. We certainly don't think it's coincidence that we delivered pretty good results on the quarter in terms of flows, in terms of margins, in terms of delivering on clients' needs, in terms of delivering on employees' needs as well, and shareholders coming out as well. But we're certainly taking strides in the right direction, and we do think there's a long way to go to continue to deliver and improve our firm.
And turning now to the investment landscape, I mean, I thought 2022 was quite the ride until we got to this year. We're seeing more inflation, more volatility, more unrest. We've seen some shakiness in the banking sector at the start of the year. I don't see geopolitical tensions abating. I mean, clearly post-pandemic, we are not out of the woods yet. So what global investment themes are you seeing emerge from all of this?
Look, it's a great question. I agree that this has been quite a crazy year from an investment perspective as well. And the volatility in our minds will continue to remain, certainly in my mind. If you think about some of the large themes that we're all dealing with, we think about three of them in particular that we talk about, that we think about, and certainly that our clients are speaking about. The one that you mentioned, Sarah, right off the bat is certainly something on people's minds, kind of the global geopolitical realignment that's going on right now. One has to think about politics as one invests in different parts of the world, whether that be in Europe and what's going on obviously in Ukraine, whether it be in Asia and what's happening in China and kind of the movements there. We had in some of the videos, the UK government instability. There's certainly a US election coming up and kind of rifts that are happening there. That's really, really important in the broader theme of investing and make sure one is investing appropriately. And that impacts how we think about our overseas funds and our emerging market equities funds and emerging market debt funds and US equities and European equities, et cetera. And that really kind of filters through. It has impact on supply chains as well, where we see decentralization of supply chains happening. It's not just manufacturing product in one location and sending it elsewhere. There is a different set of nodes from a manufacturing perspective around the world. Onshoring, nearshoring becomes an issue. That impacts how we think about real estate investment. That impacts how we think about small and mid-cap stocks and the innovation that those drive, et cetera, et cetera. So really, one big theme, Sarah, that we're hearing a lot from clients and we're spending a lot of time about is the geopolitical realignment from a global basis that hasn't been this dynamic as it has been in a while. So it's really happening now. The second thing we talk about quite a bit is effectively this post-COVID demographic driver. It impacts how people live? Are they living in apartments? Are they going to work every day? So real estate is impacted by this. So really this kind of post-COVID world and the changes that are more permanent around that is certainly a second theme that we think about. And then the third theme, which is almost an upshot of all this, is well, we can use different words for it, but it's effectively the return of cost of capital. If you think about over the past 10 or 15 years, cost of borrowing was extraordinarily low. And so if you were a private equity company and you could lever up quite significantly, the cost of levering up would not be very high. And so you could get outsized return versus perhaps the public markets. That impacts biotech, that impacts real estate, that impacts US small and mid cap stocks, that impacts overseas stocks as well. That privates versus public is coming into a much brighter picture right now. It's a reckoning day, so to speak, for privates because it's not free anymore to lever up. That impacts what we call the haves and the have-nots. Some companies that can show innovation will be differentiated. Some companies that are better than others will show that they can perform better. And within that haves and have-nots will be delivered alpha for our clients and our clients' clients. That's very important because that's not what was happening over the past 10 or 15 years. You were a great company, you were a bad company, you could still get loans, you could still invest in your business, even if your cash burn was very, very high. We don't think it's going to be as benign of an environment so that everybody's treated equally. There will be differentiation. And of course, part of that return of cost of capital is that yields are higher too. Big rotation into fixed income occurring. It was a very, very long time where fixed income was irrelevant to a lot of our clients and their clients. Well, now it matters. You can actually put cash aside and sit there and get 4 to 5% type yields. Now, does that go up and down over the next little while? It might. That's a very, very big shift, which helps all of our fixed income franchises as well, whether it be high yield, whether it be core, whether it be some of the other elements of our franchises. So again, the geopolitical realignment, the post-COVID demographic shifts that we're seeing, and then in the end, this cost of capital not being free anymore, we see those as very persistent themes. And the good news is we think about those themes all day long. We are an active investment shop. We deliver alpha through deciding between those themes and choosing companies and securities for our clients and our clients' clients.
Thank you very much for elaborating on those investment themes. And we will hear about those quite a bit in the rest of the day. And we've got some fantastic speakers on those topics. Well, we're going to open up for questions from the audience in just a moment. And while you are typing up your questions, I'll ask a follow-up question for you, Ali. I was intrigued by when you spoke about the two types of companies, the haves and the have-nots. And I'm curious, how do you define those? Is it really that binary?
Well, so it'll be more and more binary. If you think about it over the past several years, we've been talking about, the cost of capital is very, very low. If you are a company that is not growing or actually not even making money, you could always go back and get a loan for a very, very low rate. That keeps you surviving for quite some time. There will be a time of reckoning, whether it be in the private markets or the public markets, between the haves and have-nots. And so I do think going forward, you're going to have to pay as a company for the loans that you take out. That will start differentiating. And the beauty of that, Sarah, is that's what we do at Janus Henderson all day long. We differentiate between the good companies and the bad companies. For the past 10 or 15 years, it didn't really matter so much if you're a good company or a bad company, but you could keep surviving. Going forward, survival bias will not be quite as easy. You have to decide, you have to be a good company, and we're out there selecting those good companies and those good securities all day long. By the way, one of the themes that we think, and it's a question that I see popped up here, so I might as well address it as well. It's not just picking the good companies and the bad companies. You can also short the bad companies or figure out other alternative ways to take advantage of that. So we do believe that the continued flows into alternatives businesses, whether it be privates, whether it be public alternatives, to be able to accentuate that differential between the good company and the bad company, or the good security and the bad security. Is it a senior loan? Is it a mezz loan? Where is it on the fixed income stack as well? That's going to drive significant alpha for our clients going forward as well. And you can play that in the alternatives world and amplify those have and have-nots as well.
Thank you for clarifying that. And you mentioned alternatives, so that leads me nicely into a next question, and that is about the democratization in investing in private markets. Are you seeing an uptake there? Is that a trend that you see growing?
So yes is the short answer. The longer answer is it follows a trend we've seen for many, many years, in fact, decades, which is the democratization of sophistication. Effectively, some of the sovereign wealth funds start off with doing something that's a little bit different, a little bit more risk taking in some way. They're typically the first ones. They're more sophisticated in their nature, and then it starts democratizing down. You could say that about high yield in the fixed income world. You could say that about high conviction investments in the equities world. You could certainly say that about privates and private credit as an example. And now you're seeing that come through again as that industry or part of the industry becomes established, it actually starts to translate into individuals, retail, as we like to call it, and that is something that continues to democratize. So that theme has been around for decades and decades and decades. The democratization is sophistication, is how we call it. And right now, that sophistication remains alternatives and privates in particular. That's going to start being democratized. The key, however, is to make sure that it's fit for that consumer, fit for that individual customer. Not everybody should have privates, at least not to the same extent as the person next to them. And it's really not to the same extent as some of the more sophisticated institutional investments out there. But together, I do think that there's continued sophistication that's going to be democratized for the retail and individual consumer.
Yeah, I understand that. That makes a ton of sense. I wanted to pivot slightly and mention that I listened to your recent podcast episode where you speak with Dr. Myron Scholes, who is our chief investment strategist, and he mentioned, I really like that soundbite. Data is the new oil, and what I think he was saying there was the gathering and interpreting of data will define the success of the active asset manager of the future. And well, my question to you would be, do you agree with that statement? And how is Janus Henderson thinking about integrating innovation into the investment process?
Yeah, look, it's a great question. Far be it for me to disagree with Nobel Prize laureate on this topic. I might tweak it just a little bit in that I believe data is the new, pick your thing, solar power perhaps, but it is the engine that makes the investment world work. The way we certainly manage it is if you think about at our core, ingest a significant amount of data. We'll go back to how we do that and how that's transitioning and how we're innovating about that. But we ingest a significant amount of data. We create insights out of that data. Here's a pattern. Here's something that's interesting. And then we execute on that from an investment perspective. So we deliver and derive from data really differentiated insights, and then we invest that in a disciplined manner. Of course, we then deliver world-class service to deliver on that. By the way, that's the 3 legs of our mission. Some of you may recognize that. So on the ingesting data perspective, absolutely, data is extraordinarily important. Is it the solar power, the oil, or however you want to describe it? It is, and we're using very different ways to ingest that data. There's just so much more data, terabits and terabits of data being created every second. We have to ingest that in a different way. We are using more data science skill sets. We are, in fact, revamping the way we think about data at the firm. We've made really excellent hires in that space as well. So ingesting that data to get to the insights in a more efficient, faster, and perhaps seeing things that others aren't seeing manner is definitely going to continue to be part of our secret sauce here at Janus Henderson. We've been doing it for a very long time, but the data is changing. I will say on the world-class client service that we aspire to as well, there is an important data too. We want to make sure we're delivering the best for our clients. And so understanding what our clients' needs are, understanding their questions, being able to respond to them, and using data behind that is also going to be a very important part of delivering for our client proposition. So it's on both ends that we certainly are innovating on the data front. And over time, I think, look, Professor Scholes will be correct. Data will be the key to delivering alpha for our clients and their clients. And we've been ingesting it for a very long time. We're changing the way we're ingesting it to be more innovative as well.
And so you were talking about the themes that you see emerging, and I wondered whether you looked at it from a client perspective as well. So whether you've seen any expectations changing since the past year and so. I'm thinking perhaps particularly around data, artificial intelligence, or perhaps even ESG.
Absolutely. So we've seen many changes. I'd say those themes of geopolitical realignment, certainly the post-COVID world, and shift given the cost of capital being higher, are clearly on the minds of clients. This is not us kind of from a theoretical perspective creating this. This is what we hear back from our clients. But that leads to a couple things. One of them is no client is the same. And so different clients have different points of view. You mentioned, for example, ESG or sustainability. Now, our view on ESG and sustainability, and we brought on board a great team on sustainability and responsibility for the firm, is that every financially important aspect should be looked at when you look at a security or a stock, whether it be labeled ESG or whether it be labeled as same-store sales, whether it be labeled as valuation, whatever it might be, financially important impact has to be looked at when you're investing in a company, and ESG can be some of that. And then that's the basis of ESG integration for us. And then some clients want something that's more, and we can certainly provide them for that, whether that be impact, whether it be bringing capital to more sustainable products. We can certainly provide that, but not every client will want that, and that's okay. Our view is in this world of significant change, we have to be able to deliver for our clients' needs and our clients' needs. And every client, point number one, will actually be quite different. The second thing is you mentioned AI. Yes, absolutely, everybody's talking about AI, but they're talking about it in two ways. One is out of interest, out of sci-fi, excitement. And certainly that's going to be evolving for a very long time. We do think it's impactful. But the second thing is they want to understand how we're ingesting data. They want to understand how we're taking data in and efficiently coming to those insights to invest in a disciplined manner and deliver returns for our clients and our clients' clients. So again, to your earlier question from Professor Scholes, data is the way we get to our insights. It can be qualitative, it can be quantitative, and AI for now is a tool to get there. And we're going to be using more and more of it, as are others, we think, over time too.
Fantastic. Yeah, I'm looking forward to that, to see what trajectory AI is going to take. It's really topical. I mean, from Chat GPT to any other advances in the biotech and medical sector, you can definitely see that. They're very, very interesting points made. I think we're going to leave it at that. I wanted to ask you whether you had any closing remarks, perhaps.
Well, look, thank you all for joining. It's been quite a busy year for Janus Henderson. We very much hope that today's session and the hours with some of our top people will show you a little bit of a window into what we do and what we're so proud of at Janus Henderson to deliver for our clients and their clients. Thank you for your time. And if you have any questions, please do let us know. Enjoy the rest of the day.
Well, thank you very much, Ali, for your time, because I know that you dialing in from Denver, it's a very early start for you. So I'm very appreciative of that. So thank you very much. And I was going to say to our viewers that, that if you have any further questions for Ali, please don't hesitate to get in touch with our media relations team, and we'll be happy to assist you. Okay. Well, there's quite a few themes that Ali has mentioned in our conversation. He talked about the decentralization of supply chains. He talked about the democratization of alternatives. Talked about a world post-COVID. So all these themes, we will be seeing speakers talk about them in more detail.